crisis, initially things were pretty squirrely, but they settled down. And that's not to say that there won't be volatility in the days to come. And other stocks, particularly regional banking stocks and broker-dealers like Schwab, may continue to come under some pressure. But liquidity is available. And so long as individuals and corporate clients don't panic, and there is now no reason they should, this should, over time, subside. It's not the financial crisis, and it's definitely not the savings and loan crisis of the late 1980s.
Well, Eric, to your point that liquidity is available, and as you described, I mean, U.S. regulators stepped in pretty decisively last night. A take that I've seen make the rounds, mostly on finance Twitter, to be sure, but still that this
echo chamber.
The echo chamber of Twitter. But the point has been made that this introduces an element of moral hazard into the markets. I'd love to hear your thoughts on that.
Oh, well, anytime the federal government does this, of course it introduces moral hazard, and that's precisely what people like Larry Summers was arguing against, or arguing what Larry Summers was citing as an argument against a full bank bailout in the financial crisis. But truly, what alternative did they have? Yes, on the one hand, it introduces moral hazard. Yes, some people perceive it as a bailout of the tycoons of private equity and venture capital like Peter Thiel and Michael Moritz of Sequoia Capital and others. But there's an ecosystem here of companies that have to make payroll, companies whose employees have to pay rent and be current on their mortgages. And the third and fourth order effects were such, even from a bank as small as SVP and Signature, that, and the signs clearly were that contagion was going to spread to others, Western Alliance, Zions, First Republic, et cetera. You need only look at their stock prices on Friday and today to see that the Fed didn't want to take the risk. And it's not just the Fed, again, it's the Treasury Department, it's the FDIC, it's the OCC, it's everybody involved. Because there are consequences to acting now. The consequences of acting later might be worse. All
right, so this is what we're talking about today. You guys, next month, I'm talking about Bloomberg New Economy, you're gonna do your inaugural European New Economy Gateway in Ireland in April.
We'll be talking about this.
So, yeah, so how do you kind of think about as you guys program? We just were talking with Mary Buckley, the interim CEO of IDA Ireland, who you guys are partnering, or who's partnering with you on this event. How are you thinking about it in terms of
I'm thinking about that in terms of the financing pipeline for innovation. SVB and Silicon Valley Bank played an important role there. And it will not be playing that role any longer, at least SVB won't. Maybe others that take over some of SVB's businesses will, but the central role that it had as a provider of credit lines to venture capital firms and a lender to venture capital portfolio companies and a processor of their needs, such as cash management, deposit, foreign exchange, et cetera, that's gone, at least in the present. So that community of venture capitalists and the industries they support have to figure out where their future sources of financing are going to come and how solid they'll be. There's always money available, but money comes at a different price, perhaps. And they have to, what the banking system and federal regulators, not just here but elsewhere, are surely recognizing now is that there was concentration risk, unrecognized concentration risk in SVB. On the one hand, there was this single point of failure aspect to it that we saw play out very quickly. And on the other hand, SVB clearly was a creature in many ways of the financialization of the US economy. Once upon a time, it was a lender to startups. It became, more than anything else, a lender to venture capital firms, and not just to venture capital firms for the purposes of making investments, not at all. It became a lender to venture capital firms providing what are called subscription lines of credit. In other words, giving venture capital firms money so that they make equity investments before they have to call on their limited partners. And that's, I say financialization because That's financial engineering. That's not actually helping anybody. It's just helping them put up smoother internal rates of return.
And I'm going to reveal myself as someone who spends a lot of time online, but I think it was Joe Weisenthal
No.
who made the point on Twitter that SVB came into existence, I think, in 1983.
40 years ago.
So, yeah, this incredible just like period of time bookend on both ends by SVB. And you talked a little bit about, how important this was to the private equity world and what this meant for Silicon Valley in terms of the tech scene. I mean, what does this mean for the future of the U.S. tech scene for years to come and globally, too? I mean, what are the potential ripple effects?
Well, I think it has less to do with SVB and more to do with the underlying point to Joe's observation, which is that SVB was born at the beginning of the bond bull market, and it died, effectively, at what we might call the end of the bond bull market.
That zero interest rate.
But there have been ups and downs in interest rates over that period of time, and venture capital as an industry proved quite resilient.
We went through the great financial crisis
Sure.
at that time.
So,
Tech bubble.
I mean, if the suggestion by anybody, I don't think it is Joe's suggestion, is that venture capital is doomed, I don't think it's doomed. I think, as with everything else, the cost of capital is rising. It'll be harder to do deals. The hurdle rates are going to be higher. The success rates will be lower. And it'll be a tough patch in the startup world. And maybe the returns on venture capital investments will, on the whole, be lower. But then we'll enter a new cycle, presumably at some point, where interest rates will be declining. And these kinds of investments in higher risk, in higher risk companies or higher risk vehicles, with more, and that's my phone, forgive me. It's my daughter, for those who need to know. I just silenced the ring. I'll give her a call back. Right, so the returns, but once again, as is the case with all cycles,
Right.
it'll improve.
Eric, thank you so much. And as we said, the Bloomberg New Economy Gateway Europe event, April 19th and 20th in Ireland.
Dublin. It's going to be fantastic.
All right, looking forward to it and hearing more. All right, our Eric Schatzker. Right now, it's time to go to Leslie Latto and World of National News. She's in our New York newsroom. Hey, Leslie.
Hey there. President Biden trying to calm Americans' fears following the failure of these two banks we've been speaking about all day long.
Americans can rest assured that our banking system is safe. Your deposits are safe. Let me also assure you, we will not stop at this. We'll do whatever is needed.
In those remarks this morning, the president said customers with accounts at SVB Bank in California and Signature in New York will have access to their money. He said that banking losses will not be taken on by the taxpayers, but will instead come from fees banks pay into the Deposit Insurance Fund. This comes after the two sudden insolvencies of the two institutions. The chair of the Senate Banking Committee, Bill Hagerty of Tennessee, tells Bloomberg regulators definitely have a situation on their hands.
Auction process over the weekend failed. During the weekend, they actually did receive a bid. I'd urge strongly that they should take the most competitive offer and have a bank in place today when the market opened.
Hagerty said even though taxpayers will not be paying for it, banks will have an increased fee. As the president said, millions along the East Coast bracing for a powerful nor'easter. Forecasters say the next 18 to 36 hours will bring snow, heavy rain, strong wind, power outages, and coastal flooding. And a split by jurors means no death penalty on the table for an Islamic extremist who maniacally raced a truck along a popular New York City bike path, killing 8 people. 35-year-old Sayfullo Saipov from Uzbekistan ran them down. The New Jersey resident gets an automatic life sentence. Global News 24/7, powered by 2,700 journalists and analysts over 120 countries. I'm Leslie Latto on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:40 on Wall Street. We check the markets all day long and all night long for you here at Bloomberg. And we got a lot of shoes up in the air. Everybody waiting for another one to drop. Another one did not drop today, although some stocks did drop. We ended up closing mixed. On the one hand, concern about regional banks weighing on things after the two bank failures we've been talking about. On the other hand, some hope the Fed will lay off the rate hikes. But Subhadra Rajappa, head of U.S. rate strategy over at SocGen, says she is just not convinced the bank runs will force the Fed to stop raising.
It's very soon to make a call on the Fed being done. So if you look at inflation, it's running very hot. You have a very strong labor market. And most importantly, financial conditions are easy. The financial stability risks seem to be somewhat ring-fenced and isolated with a couple of banks. The question really becomes one of, does the Fed have all the tools it needs to be able to contain this problem?
And Rajappa speaking there ahead of a choppy trading day. The Dow down just about 0.3% down, closing 90 points lower. The S&P 500 closing about 0.1% lower. The Nasdaq, though, it did close in the green, up almost 0.5%, that is, up about 50 points. Regional banks under pressure. Take San Francisco-based First Republic, for example, down more than 62% on the day. Trading halted there multiple times as they tried to process those sell orders in an orderly fashion as best as they could. Some depositors lining up to get their money out of regional banks like San Francisco-based First Republic, and video of that making the rounds on social media. Amid all the speculation that the Fed might lay off the rate hikes, we did see a pullback for the 10-year yield, about 3.53% off the lows of the day, but still sharply lower on the day compared to the previous day. Same thing for the 2-year. NYMEX crude, it also finished lower, down well over 2%, close to 3%. And COMEX gold, we saw a big rush to havens. Spot gold, it closed more than 2% higher. And that is a Bloomberg Business Flash. Carol and Katie.
All right,
guys.
Thank you so much, Denise. Really appreciate it. Well, among our most read stories on the Bloomberg today is about another important aspect of the collapse of Silicon Valley Bank, and we certainly have been touching on this with some of our guests and just with our Eric Schatzker, and that is the subsequent global reckoning at venture capital and private equity firms. You know, just this whole idea of innovation and startups, which all of a sudden found themselves suddenly exposed altogether to the tech industry's money machine. So let's get to that story with Priya Anand. She's Bloomberg News technology and venture capital reporter with us now from our San Francisco bureau. Priya, good to have you here with Katie Greifeld and myself. So what are you? Let's just big broad. There you are in San Francisco, Silicon Valley, just outside. What are you hearing about the conversations and concerns still going on in the Valley when it comes to the startup scene and the result of the failure of SVB?
Well, as of last night, when we got word that depositors would be made whole Monday, today, there's been a huge wave of relief. I mean, immediately before I could even really fully process the news and read through the statements about it, I got multiple text messages from investors who were just relieved and founders who were incredibly relieved. People had been working all through the weekend. I don't think anyone around the tech VC startups industry had a real weekend at all. People were working through the weekend to try to figure out how to make payroll today. In the event that they didn't have access to all their funds. And it's important to remember, Silicon Valley Bank was such a huge institution here, and it's hard for people to really grasp how big of a deal this was, but a lot of founders said we didn't have other bank accounts in other places that we could just simply move our money to once panic started spreading on Thursday. So I just spoke with a founder earlier today who, needed to, on Thursday when she started worrying about the situation at SVB, she had to go first open a new bank account, which can take time to figure out and to get all the details and documents together. So I think when people think about what a shock this was to the system, it was a shock in many different ways, and a lot of founders didn't even have alternate options to be thinking about.
And you can see that shock all over the charts in any asset class. But you make a really interesting point that, I mean, a lot of your sources, a lot of these investors, these private equity venture capital firms, they didn't really have other banking relationships. When we think about the impacts, the knock-on effects of this episode for years to come, I mean, I have to imagine that that's one of the easy ones, right? That you don't just necessarily have only one counterparty.
That's right. I mean, look, I'm not saying that nobody out in VC, especially at the largest firms or in some of the larger tech startups out here, that nobody had relationships with other banks at all. But the thing is, SVB was such a huge player that for a lot of the smaller companies, it was the only player they really relied on. And that's certainly a sentiment I've heard. But now people, of course, having seen what can happen when you're exposed to just one institution so heavily, of course, everyone's got diversification on the mind now. Everyone's thinking about having multiple accounts in multiple
Isn't it kind of funny, considering we're a market business network, you know, how often does diversification come up in conversations?
Right, yeah.
Right?
I've heard it a few times.
It's a good thing to do. Having said that, you know, Priya, do we need to be, or does the startup community have to, for a time, worry about just a dry up in terms of access to capital and funding?
Well, look, this year was already not necessarily going to be an amazing year for funding for companies, right? We've all been covering how the funding landscape, things have dried up, except for AI, which is having this huge boom this year. And actually, investors I've spoken with this morning think that, you know, the dust needs to settle for the next couple days, but a couple people I've spoken with so far have said that they think things will actually continue the way they had been going once the dust clears here. But of course, it completely remains to be seen. I mean, I think we can't quite, you know, Monday afternoon Pacific time here, after all this has gone down for the last few days, have a full understanding of what is going to happen for the rest of the year and what the shakeout will be. That said, I think one thing is clear. SVB's failure is not something people in the tech industry necessarily expected to happen this year, in a year that was already supposed to be bad. And I think the fact that this has happened and SVB collapsed and so quickly is an ominous sign in a lot of ways. Now, what the long-term ripple effects will be, it's still unclear. It's still playing out.
Important context that we can't say this is done and dusted and think that we know everything. The dust still needs to settle. And with that in mind, I mean, when you're talking to some of your sources, the investors that you're in touch with, what is sort of the next 2 weeks, 2 months, the path forward for them? Now that there is this sigh of relief that you described, I mean, what are next steps for some of these firms?
I think people haven't even gotten to thinking about next steps fully yet, because there's sort of this recovery mode where right now, you know, last night was a sigh of relief. This morning is, okay, like, can we get the money? How quickly can we get the money out? People are breathing sighs of relief. I talked to someone earlier who said 30 minutes before we got on the phone, she had processed payroll for her company. So we're still in the immediate kind of aftershock moments, I think. But one important question is Silicon Valley Bank, venture debt is a huge part of this industry. And what happens for companies that are seeking debt? Will they be able to get that from alternate sources? You know, I've spoken with a number of investors who over the last few days said anytime they approached SVB, SVB would help if a startup was in trouble. They'd find a way to restructure terms or figure out a way to prevent a startup from having to shut down so they could maybe get a little bit more runway. It's unclear if the future will be as friendly toward companies that are at risk of shutting down. I think that's a fair question and something to watch for.
It's just kind of staggering. But I do, you know, companies tend to have a relationship with a bank, right, in terms of their funding needs. But it's kind of interesting for startups to maybe, I don't know, like a rethink in terms of this strategy.
And a couple people, I will say, a couple people I've spoken with have said the future is unlikely to, at least anytime soon, have a central figure like SVB. I mean, there will be a number of banks that try to come in and capitalize on the fact that there's no market leader in the tech industry necessarily anymore. For startups, at least, no one was filling the kind of role that Silicon Valley Bank filled. One fund manager told me that she hosted a breakfast with SVB about a week ago.
Right.
And she had another event planned with them in 3 weeks. Like, this institution was not just a bank. It was really filling a void in a lot of ways.
Well, and we're continuing to find out a lot more about Silicon Valley Bank. Priya, thank you so much. Priya Anand, technology and venture capital reporter at Bloomberg News, joining us from our San Francisco bureau. This is Bloomberg.
Thank you.
Your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. We've been watching the banking industry all day for another possible shoe to drop after the failures over the weekend of Silicon Valley Bank and Signature Bank. Shares of First Republic in San Francisco halted multiple times today after a depositor run their shares finished more than 60% lower on the day. But the federal government, as we've been reporting, has stepped in and guaranteed deposits at these regional banks. And the Fed has also set up a special lending facility to protect other banks from these ripple effects. Brooklyn-based Etsy shares finishing more than 2% lower. Etsy wrapped into all this because a lot of sellers on Etsy reporting over the weekend they could not get their money out when they sold items because SVB, the failed San Francisco bank, was Etsy's processor. Etsy, though, is now starting to use other payment partners as they make that adjustment. All this, though, isn't stopping the deals from happening, including a big one in the biotech business. We get more on that from Bloomberg's Jeff Bellinger.
Pfizer agreed to buy Seagen for $43 billion. Seagen has been developing biotech drugs. Key products use man-made proteins to single out and kill cells in cancerous tumors without damaging surrounding tissue. Pfizer has wanted to expand its cancer treatments. It expects this deal to close late this year or early next.
All right, thank you, Jeff. And Pfizer closing almost 2% higher. Washington State-based Seagen up almost 10%, actually up almost 15%. And those are some of the company stories we're following this hour. I'm Denise Pellegrini. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this Monday. Carol Masser along with Katie Greifeld. Let's get a check on the latest world of national news. Off to Leslie Lotto we go. She's in our Bloomberg 1130 newsroom right here in New York City. Hi, Leslie.
Thank you, Carol and Katie. President Biden reassuring the nation the banking system is safe after the failure of the two banks, as we've been speaking about all day, Silicon Valley Bank in California and Signature out in New York, here in New York. The president reassuring those with deposits in each bank they'd have complete access to their money. Former Treasury Secretary Larry Summers said that at this point, it would still make sense for the Federal Reserve to boost interest rates by 25 basis points next week. Given the importance of defeating inflation, he spoke with Bloomberg's David Weston.
I wouldn't take anything off the table right now. We're going to get important numbers on the CPI. We're going to see how financial markets move and evolve over the next week.
The Defense Department's asking for billions of dollars for munitions and long-range missiles to deter China as we face other threats in the world. In Washington, Irv Chapman reports.
The goal, Deputy Defense Secretary Kathleen Hicks said, is to make sure the Chinese leadership wakes up every day, considers the risks of aggression, and concludes that today is not the day.
We are not a paper tiger military. We are very combat credible, very well trained. These investments are making sure we can deliver outcomes that we believe we need. We think we're better at it than the Chinese are.
Hicks said the Pentagon wants to sign multi-year contracts with munition suppliers, encouraging industry to expand production, to supply Ukraine in the near term, and to ensure adequate capacity for the future. In Washington, Irv Chapman, Bloomberg Radio.
And finally, the FBI's new hate crime statistics show an almost 12% increase in 2021. It's revised data that shows 65% were racially motivated. The original release had a slight decrease in overall hate crimes, but it had low participation and none in New York or L.A. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leslie Lotto, and this is Bloomberg. Back to you, Carol and Katie.
All right, Leslie, thanks so much. As you know, March is Women's History Month. Every day this month, we are celebrating significant moments in women's history. Let's get your installment for this Monday, March 13th, 2023. For that, here's Bloomberg's Lisa Mateo.
On this day in women's history in 1942, Julia Flicka of the Nurse Corps becomes the first female colonel in the U.S. Army. Flicka originally worked as a teacher, but after the passing of her son during childbirth and losing her husband who suffered from tuberculosis, she turned to medical care. Flicka entered the Army Nurse Corps during World War I. She became a first lieutenant and captain and served as chief nurse at a number of hospitals. As World War II approached, Flicka led the recruitment for the Army Nurse Corps, assigning the greatest number of nurses ever mobilized. She was later promoted to colonel, a first for women in the U.S. Army, changing her title from superintendent to chief of the Army Nurse Corps. That's today in women's history. I'm Lisa Mateo, Bloomberg Radio.
All right, Lisa, thank you so much. Carol Masser along with Katie Greifeld here in our Bloomberg Interactive Brokers studio on Bloomberg Business Week. So how are you thinking about tomorrow?
I cannot wait to see what CPI does to the narrative. We got those numbers at 8:30 in the morning. Year over year, we're expected to go to 6% on the nose from 6.4% the prior month. On the monthly figures, it's expected to be 0.4%. Decelerating from 0.5%, but geez, I don't know. All eyes on CPI for me.
If we get a hot inflation print, I think it's going to be really tricky for the Fed.
Oh, I know. I know.
The meeting, right?
Now that we have maybe some evidence that some things are breaking, those tightening financial conditions visible in front of us, but inflation's still a problem, what do you do?
Yeah, exactly. We've come down a lot in the last year, but we still have a ways to go, and everybody says that last kind of round of bringing inflation down is stickier and tougher.
To get from 6% to 2%?
Good luck with that.
That's a lot of wood to chop.
And especially when you have a lot of people who don't even believe 2% is real, right?
Yeah, right.
You're going to leave us, I know. Thank you so much. What a great couple of hours.
I'll be with you tomorrow, so
Okay.
something to look
We'll
forward
be here.
to.
I'm looking forward to it. Katie Greifeld, as you know. All right, we've got another hour, though, of Bloomberg Business Week. We continue our coverage on the banking sector and so much more. This is Bloomberg Radio.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Bloomberg Business Week continuing live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. I'm Carol Masser. Coming up this hour, Steve Ratner, Chairman and CEO of Willett Advisors, former Treasury official and former advisor to President Obama. He's going to weigh in on the Silicon Valley Bank and its impact. And on that, we're also going to take a look at the U.S. economy. Right now seems to be doing okay, at least for now, but risks and spillovers, they do remain. And then we're going to talk about the tech community, continuing along with some of its major initiatives. We are watching the tech community, the startup community so closely. We're going to talk about the Uberization, if you will, of the freight industry. That is certainly on our radar. First up, though, let's take a look at how the markets closed on this Monday and some of the top business stories for that. Here's Denise Pellegrini. Hi,
Yeah,
Denise.
it was an up and down crazy kind of day, as you guys have been tracking it all, and we did end up really mixed with all this that's happening with the regional banks weighing on things a lot. Concern about the failures of Silicon Valley Bank in the Bay Area and also Signature Bank in New York really weighing on things. Thomas Schode, president and CEO of KBW, had some great insight. He said this volatility, well, it's really all about the unwinding of the COVID relief in two ways.
We've had rate increases at the fastest pace of my career. It's